Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping back down into the world of XRP, taking a look at what has been going on most recently and what we think is likely to happen next. As I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not consider subscribing, tapping the bell, selecting all the notifications, and in doing so you will not miss another video update. In this video, we are going to be covering two main subjects. We're going to be taking a look at the here and the now small time frame stuff with what you see here, basically Elliott Wave theory, and then we're also going to take a look at the small time frames on smart money concepts. So then roll everything up, taking a look at the bigger macro picture with what I think is likely to occur, both at the top level with Elliott Wave theory and smart money concepts. If these things are a little bit alien to you, you're not 100% certain what you're looking at and want more information, why not check out in the description down below 𝗕𝗘𝗪𝗏𝗀𝗀school.com, where we have put together some course material on Elliott Wave theory and smart money concepts to help you get an understanding over the market. We also do run memberships, so if you are looking for a little bit more from the crypto space, why not check it out? Linked in the description down below, you will find Patreon, but also there's a join button just below this video as well, where you can actually become a YouTube member and get access to the Discord with a whole host of additional benefits. If any of that sounds of interest to you, check it out. There's more details in the description. Okay, let's make a start with XRP on the hourly chart here. Binance is our data source, just from an Elliott Wave theory perspective to start with. We won't really talk about the supply zone. That is a smart money concept term, okay, but it is an interesting one that we've kind of been working on. Now we're just going to kind of follow in on what we're looking at over here. We saw the move to the downside. We can see that we've got this reversal up here as well. We can kind of see this was an interesting kind of 5-wave structure. We can kind of draw this right in here, 1, 2, 3, 4, and 5. So we can see that we had the 5 waves, which basically now means that we move on up. Now this is a very choppy move, and I know the obvious thing that a lot of people will be thinking about will be that is this a 5-wave structure from here? 1, 2, 3, 4, then 5, and I don't think it meets any of those requirements. We'll go ahead and jump into that just to kind of get clarification on the structure. So we use the fibs here, and we can see that no, we didn't hit the 1.618 until we got down to this low, and this would basically be a 3-wave drop at best. So that's not really what's going on. It looks to me like we had a 335 coming in down here, or even if we really wanted to try to push it, we had a diagonal into a 5-wave structure, so a zigzag. But probably easier to think of this as a 335 flat correction, taking us down into these lows. Then we end up with this really choppy move. I'm going to simplify this, just keep it nice and simple so we don't have to kind of worry too much about it, but it looks to me like we just have 3 waves coming up here, actually to this peak right here. Then we have this interesting structured move to the downside, sharp drop, but then invalidates anything further, and we start to move on up. So we know that this is only 3 waves coming down here as well, so we can very quickly draw those in, and we have that structure all mapped out. So we know exactly where we are at this point down here when we had this local low. This local low, for reference, was 35.39 cents. We can now see that we have this progression going up a little ways, and we can see here that we can end up with these kind of corrective structures to the downside as well. Again, we kind of want to try to think of these things as impulsive, but they create invalidation, so they're not impulsive structures. At best, we have another flat correction right in here with a 5-wave structure that only really appears right here. We can kind of see it happening like that. And again, we end up with this diagonal, almost diagonal. In fact, we have this wick here at a low of 36.8, and then we have this wick here on a high of 36.81, slight overlap. So again, we think of that as a diagonal end, but again, we this rally up. So ultimately from here, it to me looks like we're doing just 3-wave corrections right in here. If I actually draw that in the correct area, it would be right in there like so. A little bit strange to kind of think of it like that, but essentially that is what's going on. So from an Elliott Wave theory, there's nothing more or sinister to it. Now, when we kind of zoom out of this to a slightly bigger scale, we can of course acknowledge that if we run the fibs from this low over to here, we can see that we came short of the 1.618. So again, not an impulsive structure at this point, just corrective. So we can actually just roll everything up into a 3-wave structure like this. Okay, so from an Elliott Wave theory point of view, we're looking for a reversal right up here. Okay, so we're looking for a bit of a move to the downside on this hourly chart. Again, we end up with overlap right in here. Okay, so it's not looking like we are doing anything too much at this point. However, with diagonal based structures, we have to consider what goes on in those. Basically, there are a series of 5 waves made up of 3 waves internally only of each wave. So that sounds like a bit of a mouthful, but basically we have 3 waves going down, 3 waves going up. Essentially that there represents a wave 1, a wave 2. We then have 3 waves to come down into a wave 3 that must hit 1.618 unless of course we're in a contracting or expanding diagonal pattern. And then we have a 4 and a 5. Okay, so essentially that gives us a bit of an idea as to kind of what's going on here. Now we'll be looking for a move upwards before we can go down. We can see that on the momentum indicator and oscillator down at the bottom here on the stochastics. And this basically means that we should be looking at moving to go up before we go down. And again, we're looking for 3 waves, right? 3 down, 3 up, 3 down. Okay, and we're looking for that 1.618 if we want it to be a regular, a diagonal pattern. And that would put us right down here. Almost instinctively got that one, right down there at 36.94. Okay, that would be where we'd look at that. And then we would look for a 3-wave correction up into wave 4. And typically this, under a diagonal structure, will create an overlap with wave 1, one of the structures that you're allowed to kind of have that. If I remove that, you can kind of see that we would be looking for an overlap there for our wave 4. So we'll pull our wave 4 above the low of that wave 1, and then we'd have our final 5th wave down. You can see that the price is coming down here at the moment, so we can come down, bounce up, come down, and then do the next kind of set of moves. So ultimately, our next kind of price expectation is to gravitate our way down a little bit. We can't get the targets until wave 3 is coming in, so we know where wave 3 should be. We know wave 4 should be 38.2% of wave 3, but with a diagonal pattern, we would expect it to overlap with wave 1, so we'll keep that in mind. No guarantees that this plays out though, but it is kind of the expectation that we kind of see this play out. Now, if I remove that, we can actually just look at it as a series of corrections. The next move is down regardless of whether it's a diagonal or not. So it's a little bit too soon to kind of be marking it up as a 5-wave count until we definitely hit that 1.618 target low. Okay, so on our hourly chart, that's looking pretty good. So let's go ahead and take a look at our smart money concepts and take this down into our hourly as well. We'll just go ahead and make this actually a little bit legible. There we go. So here we can see that we do have some interesting things occurring within the price action here for XRP. So let's talk about the positive. On this 1-hour chart, our positive is that we have a major change of characteristic. This essentially means the market was moving up. Okay, we've got this kind of bullish tail to the upside. Now, when we have these major change of characteristics, one of the things that we should acknowledge is that normally you get a little bit of an overlap as we kind of correct down. So we have that initial surge upwards, and then we have a usual 3-wave correction coming on down. That usually creates a little bit of an overlap with that change of characteristic level. Now, it just so happens in this particular case, it's actually a really neat example because we have equilibrium down there, which is basically an equal area between the premium area and the discounted area. Okay, that's basically like a 50% level between the two. Equilibrium. Price loves the equilibrium area, loves to react to it. So price naturally wants to kind of gravitate down there. Now, not only is this equilibrium also the change of characteristics, we also have a fair value gap. A fair value gap created in here right on top of equilibrium and change of characteristics is basically like a triple confirmation that this is where the price has to kind of head down towards. Now, it's not a guarantee, but looking at these things being stacked up, not only do we have Elliott wave theory telling us that we're looking to gradually move our way down a little bit on that hourly chart, we also can see here that we did have a positive bullish change to the upside. But before you can move up, we have to kind of consider closing down any fair value gaps that were left behind. And it just so happens that price does like the equilibrium as well. So when we start taking a look at this, even from an Elliott wave theory point of view, we just want to roll this up into kind of 3 waves. And then we actually right back down, not only on the change of characteristic in the fair value gap, in the imbalance of the order books, but also equilibrium. That seems to be the most obvious area. Now for this is basically 37.9 through to 38.2 at the moment here for XRP on the hourly chart. So one of those things that we're going to have to kind of be paying attention to, we're more than likely going to be revisiting those areas. Now, as I was drawing up on Elliott wave theory on the other chart, over here, for example, we were looking at maybe coming down quite a bit, maybe towards that kind of 37 area. And if we take a look at this one, we can see right in here, it put us right down into that range. We may even come back down into this green block right here. This happens to be an internal order block for purchasers. And so basically, this is where people are willing to buy. And this actually comes in at 37.2 through to about 37.7. There's also a little one just a little bit lower, right down here. This would be 36.6 through to about 37.1. So again, we do have a lot of things running in our favor here, but we want to be aware that we have to move down before we can move up. And still, our major characteristic change is remaining there. So we are positive. We do have a weak high, meaning that we are likely to break that. And we have a strong low, which means that's more than likely going to hold for now. So we have our lows in at around 35 cents. That's looking pretty good as a strong area for support. And we do have positive bullish change with a solid line here, whereas we have bearish change of characteristic with a dashed line. This is a minor movement, so short term we're looking for corrections down, but slightly longer term we're looking for the moves to the upside. Okay, so that kind of gives us our smaller time frame stuff. Now if we come over and take a look at this XRP tether on the 1 week chart with Binance, we can then see that we're coming up into our resistance area between 42.2 and 45.7. We came up into here. We were expecting to kind of push up a little bit more, but we've kind of shorted this out a little bit, so that's great. We can see that this was a previous area of support turned into resistance, and we're looking to gravitate our way down a little bit. Now as I zoom out of this, you can kind of see where my expectations are, that we're looking to move down a little bit lower into a Z wave. Now if I zoom out even further, the structure of this entire move happening from the April 2021 highs, okay, up there, we have a W wave coming down, an X wave going up, a Y wave coming down into the lows for June 2022. We have an X wave moving up into the highs of September 2022 or October 2022. I can't see exactly which wick was high here. And then we have this Z wave looking to come down. Now the Z wave, if I draw this on right to this wick here, this has an expectation of this area. I'm going to highlight it so you guys can see. It's going to be quite broad because a Z wave can be multiple different things. In fact, I've drawn that wrong. Bear with me 1 second. I actually need to draw it slightly differently. It needs to be on the W wave, not the X wave. So let me just go ahead and grab this low, this high. We've transitioned this over to the high of our X wave, and then we can see right down here where our Z wave should be. Okay, so a little bit broad again. It's basically between the 0.618 and all the way down to the 1.236. That's a broad area to think about, right? But that is where your Z waves typically do go, okay? This is basically between 10.5 cents, which is a very extremely bearish, and the highs of around 24.34, okay? So we can see that this is where price wants to gravitate down towards using Elliott wave theory. Now, we can go and take this a little bit easier. We would expect 3 waves within our structure here. We kind of have 5 waves to start with, which means if we start with 5, we end in 5. So we'll be looking for 5 waves to come down. And our 1-to-1 to 1.236 typical move of a kind of zigzag pattern C wave structure puts us right in this little sweet zone. I'm going to remove the fib so we get rid of all that data off there, and we'll just see this little box between 20 and 23.2. This area right here would be the area that I would be saying my Z wave is likely to be. Now we'll see how that kind of plays out. Essentially what we're talking about here is looking for some kind of 5-wave structure to kind of finish this one off, so we end up with this little low point. But it's possible that we do come down lower. As I said, that Z wave has pretty broad range here, but ultimately that's kind of what we're looking for. We're looking to kind of come down a little bit into new lower lows. That hasn't yet happened since June of 2022, but essentially we are looking for these lows. Now if I were to trade this, then essentially these are the things that I'm going to be looking at. I'm going to be looking at the smart money concepts on the smaller time frame. So if I do come down into our hourly, I'll be looking at, if a long position, if I was going to do some trades, I'm going to put a long position in and around this equilibrium area. So basically I'll be looking at around 37 to 38 cents, somewhere in this little range here, and I'll be putting my stop loss below the strong low at the moment, right? Because this area down here, let me go ahead and actually highlight this for a second, right? This is an area that should not get broken. This is 35.89. Now I wouldn't use that because you'd get double bottoms, right? And you might tap 35.89. So I'd go ahead and drop this down to, like, I don't know, let's say 35.8, just below that area, right? Because if you lose this support level, then of course you're going to have a new structure anyway, right? But this low should hold, right? So that's where I'd put my stop loss, and then I'll be looking to kind of go long somewhere in one of these internal order blocks and maybe push it up a little bit higher, right? And so there's ways to kind of trade this. So again, you would look at your long positions. Maybe we enter around 37.28. Stop loss down here at that low, and then we'll be targeting out at least 1.5 in risk reward ratio. Ideally we'd want it higher than that, but 1.5 is pretty pretty typical for many people, but I would be personally looking for as much as possible where we could analyze that and kind of get good anchor points. Now, if you're new to trading, you haven't tried trading out or anything like that, then why not check out 𝗕𝗬𝗬, linked in the description below. They're running a fantastic offer at the moment using our affiliate link in the description, where you deposit 50 USDT and you'll get cashback of 10 USDT. So why not check it out? There's other fantastic offers available as well. If I just scroll down here for a second, you can kind of see how it's kind of scales out depending on how much you deposit and various different kind of tasks and things you can do. So why not check that out already if you haven't done so already? Linked in the description down below. Now, we also are going to be running some 𝗕𝗬𝗬 competitions every single week within our Discord server. By using our code down below, you'll be basically in the pool to kind of win 100 USDT per week. And it's basically ROI. So it's not about how much you deposit. It's all about the return on your investment, right? So whoever has the best return on investment percentage within that week period will essentially win 100 USDT. That is something that we've been working with 𝗕𝗬𝗬 to do. So why not check it out? Linked in the description down below. Sign up and take part. If you haven't joined us in Discord, guys, check it out. Linked in the description below as well. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, guys. What are you waiting for? Get on it. Get into 𝗕𝗬𝗬. I don't think you'll be disappointed. Until the next video, though, guys, have a fantastic day.